Joining me for this CEO Spotlight is Stuart Tanz, the CEO of Retail Opportunity Investments Corp. Stuart, thanks so much for joining us.
Thanks for having me.
Let's start by talking a little bit about your portfolio acquisitions so far in 2016 and how the relationships that you've built over the last several years in your core markets helped you land some of these deals.
Year to date, we've acquired about just over $300 million of grocery drug-anchored shopping centers. The relationships are a big part of our external growth strategy. We have been operating on the West Coast for close to 3 decades, and that has given us a distinct advantage in terms of sourcing transactions and opportunities for the company through sellers, through brokers, and other people who we do business with. So again, we're having a very strong year this year, and we're very excited about what we've purchased, and more importantly, the quality of the assets have been tremendous with that also have the attributes of very strong internal growth as we work our magic in terms of either re-merchandising or waiting for these leases to expire.
And picking up on that, what sort of trends are you seeing among your tenants that are expanding, looking for larger space, and how does that factor into as leases come up and you look at signing new deals?
Well, the trends out west, on the West Coast, have been very strong. Starting out in the Pacific Northwest, which is the Seattle and Portland market, what we're finding today is the most active tenants are continuing to be the grocers. Moving down the coast to Northern California, health clubs, beauty stores, medical, urgent care and other types of medical uses have been very strong. And in Southern California, it's really been restaurants, a lot of new concepts, and we've seen a lot of activity on that front. More importantly, the fundamentals have been very, very strong out west, and what we've been able to do is really play offense in terms of looking at our real estate and our shopping centers, and really because the fundamentals have been so strong, we've been able to continue to capitalize on this strength in terms of re-merchandising our space. Obviously, what that's led to is the company has posted some of the strongest metrics in the sector. And that's primarily, again, because of how strong this tenant base has been.
And you mentioned fundamentals and that they look strong across your portfolio. Are there any markets where you're starting to maybe see some cracks or starting to have some concerns?
Well, the West Coast of the U.S. Was the last section of the country or part of the country that came out of the great credit crisis or the recession. And they're usually last in and last out. So when you look at the West Coast today, Seattle and San Francisco or the Bay Area are probably in what I would call the later innings in terms of the fundamentals. However, Portland and Southern California really came out last, and those fundamentals are still in what I would call the earlier innings. So as we look across the West Coast, the markets do vary in terms of the strength and where we see things going in 17, but more importantly, what we continue to see is that these markets have held up and continue to be very, very strong, and I really don't see much of that changing as we look into 17.
Stuart, thank you so much for joining us.
Thank you for having me, and as always, it's wonderful being here with you.
For more from REITWorld 2016, be sure to visit REIT.com.